Hello, everyone. My name is Valdrin Tahiri, and I'm an analyst for CCN. Today with us, we have Mr. Hyunsu Jung, the interim CEO for Hyperion DeFi, and we're going to talk about the company. So, Mr. Jung, thanks a lot for taking the time to do the interview with us. And yeah, to kick things off, so for people who do not know what Hyperion is yet, how do you define what the company is actually today?
Thanks, Valdrin, and great to be here with all of you guys. So, Hyperion DeFi is the first US publicly listed company that is building a long-term strategic reserve of HYPE, which is the native token of the Hyperliquid blockchain. But more importantly, we are not just accumulating the asset like many other digital asset treasuries. Over the past 6 months, we've designed and deployed 4 or 5 different on-chain products that enable DeFi monetization, which is effectively generating revenues on-chain. And we believe this is an entirely new primitive that we are effectively pioneering in the space using Hyperliquid as the backbone of that infrastructure.
Going into more detail, how do you explain your revenue model? Maybe going into each of the DeFi lines, in more detail.
Yeah, definitely. So we started with launching our own validator in partnership with Kinetic and Peer2. And so right now we are top 10 in validator ranking and performance. We have over 12 million HYPE, including 3 million that's been delegated by the Hyperliquid Foundation, which is a great cosign and signal that the ecosystem is aware of our activities within the ecosystem. So obviously, validator is real revenues. It does enable us to take a commission from HYPE that's staked to the Kinetic Hyperion validator. But more importantly, we are then able to take the staked HYPE and redeploy it into various revenue generating mechanisms. So one of them being the HYPE asset use service that we've designed. And it has 2 different verticals. One of them is to onboard new financial institutions to trade on Hyperliquid for a much more reduced cost. And then the other one is, the deployment of new markets. Like recently with our partner Felix, we've launched Tesla, Circle, and NVIDIA perpetuals equities on Hyperliquid. So now you have non-crypto assets trading on Hyperliquid, and we think this is a huge 0 to 1 moment for the ecosystem.
Awesome. And okay, but what you're basically saying that you have built a very large part of your business around the HYPE token ecosystem and Hyperliquid. Why did you choose that especially?
Yeah, we think asset selection is the most important component to what any digital asset treasury is doing. So there is HYPE, we see it as a productive asset that not only is there tailwinds from the fact that 99% of all the revenues that Hyperliquid generates today is being used to automatically purchase the HYPE token off the open market. And so, in October 2025 run rate, it was doing around $3 to $3.5 million per day. And all of that was going back to purchase HYPE. And so there is no other mechanism on or off chain that has this function. And then more importantly, you have the requirement that HYPE must be staked for various applications or use cases on the Hyperliquid blockchain. So when you have a market like equities, non-crypto assets, or equity perpetuals trading on Hyperliquid, even if you have a bear market in crypto assets specifically, you will still be able to have volumes tied to other assets. And so we're still seeing volumes. There's obviously been a lot of interest in equities the past couple of months, and that generates real dollar revenue. So we're actually able to kind of bifurcate the crypto side of the business and everything that has to do with just pure financial activity, which is globally accessible.
Okay, that's very interesting. Thanks for that. So basically, would it be fair to say that, for example, if the price of the HYPE token dropped a lot, let's say 40 or 50%, you would be somehow isolated from that in a way because you have other revenue streams?
I think that's appropriate to say, because whether the price of HYPE is at $40 or $80 or so on, it doesn't change the fact that you still need 500,000 HYPE to deploy a market. We think that's a really important primitive, because as the price goes down, it actually becomes easier for other participants to come in and say, we want to create a market for compute indices, volatility, FX, commodities, and so on. And right now, given that HYPE is around, the 500,000 HYPE is around $16.9 million, it's a lot more challenging to be able to source that, plus build a team, plus operate a real business. And so we've seen a lot of demand from that side of the business, but also staked HYPE reduces trading fees. It also enables you to create eligible quote assets such as the USDH stablecoin, and that will require 1 million HYPE, right? And so you can continue to see how the team has designed native staking mechanisms that create multiple demand sinks. And so whether the price of HYPE is lower, that would actually accelerate the demand for that. And the price is higher, then it just becomes more challenging. And the flywheel effect would persist either way. And that's our view and outlook.
Okay, that makes sense. So it's sort of like a win-win scenario, whichever way the price of HYPE goes. And okay, so moving outside of HYPE a little bit. So in your report, your guidance calls for around 30 to 40% revenue growth next quarter. What gives you confidence in that target? And what do you think are the biggest factors that could potentially derail it?
That's a great question. So when we provided that guidance, it was based on real revenue that we had generated, and primarily it had come from staking and a few of the revenue sources from the Hype asset use service. Now, when we provided guidance, and not a lot of other digital asset treasuries did this because it doesn't seem like they're generating effective revenue streams or they built out new business lines. But for us, we are constantly in conversations with new strategic partners, ways to support the ecosystem, and all of that is built around the demand for Hype. So we have the shared revenue streams tied to the HIP3 markets. We have fixed revenue streams tied to pure asset use. And when we put out that earnings report in Q3, we had a very strong outlook for what we could continue to build. And so that's why we were confident in being able to compound that activity. In addition to that, our validator operations grew 60% quarter over quarter. And so we expect to continue to see that compound as we allocate more Hype from ourselves and our institutional partners to accelerate that flywheel.
Yes. And if you could, I guess, not split your revenue, but just go into more detail, how much of your revenue approximately do you think is sort of operational income, and how much is it sort of market dependent or user dependent?
So probably a better question for my CFO, but when we mark at the end of each quarter, there is a component that is dependent on like how do we value the market price of Hype at that time. And so I believe when we did it at the end of Q3, it was somewhere around $40 or so. Right now, obviously, Hype is a lot lower. That doesn't change the fact that when digital asset treasury companies record net income, that counts. They include the appreciation on the asset. Now, it doesn't mean you have to actually sell the asset, but they're just marking the gain. For us, the revenues are really based on how much additional Hype are we accruing. So through validator activities, through redeployment of Hype into various other services. And then separately from that, we have the cash component where we are using volatility-based strategies and also the HIP3 markets, and then additionally the Hype asset use service. And there's a lot of other things that we're looking to innovate on because our primary focus is how can we bridge traditional finance to DeFi. And we believe, again, that financial infrastructure will be built on Hyperliquid. And so that's our core focus. And it really should exceed or move beyond just the value of the assets, because there's too much focus, we believe, on the digital asset treasury side on what the price of the underlying asset is.
That makes sense. Thanks for the explanation. So kind of moving back to Hype. So you've obviously grown staked Hype a lot this year. And what do you think are the biggest constraints that are holding back the staking operations for scaling even faster?
100%. So there are several mechanisms for a digital asset treasury company to continue to accelerate their flywheel. Now, obviously, a lot of it is tied to the at the market offering or being able to use a percentage of the volume to draw down additional capital, opportunistically purchase the underlying asset when you are able to do so accretively. And with the market downturn, a lot of reduction in volumes, that slowed down one component of the public company engine. But that's not where it should. Any digital asset treasury company should just rely on purely. It should be additionally, how can you compound your underlying assets, whether that's staking, redeployment, generating cash revenues, and purchasing the Hype. So we've actually done that through, for example, our recent announcement with Native Markets, right? When we deployed 300,000 Hype to them to enable them to reach the aligned quote asset requirement, they actually paid us in USDH a fixed amount for the use of that Hype. And so what we did was we turned around, purchase more Hype, and then start to allocate that to new strategies. So we're constantly looking for ways to generate alpha in the market, but not just from like a pure fund perspective, more of an operating company of how can we use these assets, accumulate more of them, and continue to build our products. And I believe that is really the foundation for how digital asset treasury companies must operate going forward. Otherwise, you're just at the whim of the price, and that's not really an operating company, right?
Yeah, that's true. And while these are sort of operational constraints, what do you think, like moving on to the regulatory landscape, what do you think are like potential risks that could like cause trouble for Hyperion right now or maybe in the near future?
That's a great question. One of the things that we've seen recently, obviously, is with MSCI and strategy and whether or not a lot of these companies should be considered operating companies or a different form of vehicle. Now, our focus from day one is that yes, we want to become a lot bigger than we are. And we also believe that we are seeing the birth of a new public company industry vertical, right? In the same way, robotics, EV, AI, genomics were hard to fathom that they would be here so quickly. We see DeFi as being the new frontier, and Hyperion is pioneering so much in what we can do there. And we're really pushing hard. We obviously work with the regulators. We want to ensure that we are compliant and protecting our shareholders. But more importantly, we think that there is a real operating business here, and that there is going to be so much growth that Hyperion as a public company can unlock through help supporting partnerships and really evangelizing the ecosystem. And we want that to be recognized. And so we're continuing to make our case and show it through the revenues that we generate. And I think if digital asset treasury companies aren't able to do that, they will face some challenges of the question of, what really is the business? And we believe Hyperion has solved for that already.
Okay, that makes sense. And across the DeFi industry, DeFi yields have been compressing a lot this year. And do you think that makes it harder for you to stay profitable? And is there, let's say, a minimum yield level where you would think your model is at risk, or it would kind of stop making sense, or no?
What we've seen from other digital asset treasuries, and I have no opinion on whether or not this is a good thing, but when you have so much assets under management, you will have other players such as Galaxy or other asset managers that will take the assets on behalf of the digital asset treasuries and then redeploy them into various strategies. Now, what you find obviously is that when there's a lot of money moving into limited amounts of available yields, especially on chain with all the transparency, you're right, the yields do become compressed. And so what we don't want to see is, in terms of Ethereum, Solana, or other ecosystems, is everyone kind of doing the same thing. And then you're concentrating risk just not even amongst the protocols, but also among the managers. So with Hyperliquid and Hyperion, we have kind of very free range, right? We've deployed the first market with our partners that enables the equity perpetuals, right? So now anyone that wants to trade Google or Nvidia or Tesla, they can do it on Hyperliquid, and there is really no limit, right? It's just anyone that wants to position. And then we are in multiple conversations with partners about what are the next products. Is it commodities? Is it FX? Is it anything that real institutional and high frequency traders want to participate in? And you just create the markets, right? As long as you have that 500,000 hype. And so it is entirely different in terms of form and structure. And we believe that's where the edge is, right? Because there is not a fixed yield. It is almost infinitely scalable based on volumes. And so distribution and recognition is so important. And we believe that we've really caught on to something exciting here, because the potential in this early days is very, very promising.
Okay, so in a way, would it be fair to say that for you it's more important to gain more users that use your new products, rather than just figuring out a strategy that gains you more yield?
Yeah, that's a really great way to put it. So it's not even so much about our users. We think we always want to do right by our clients. We want to do right by our shareholders, and that's the most important thing. But it's really about Hyperliquid, right? Digital asset treasuries should have extreme conviction and a long-term vision for how they can help their ecosystem win, because that is what enables the price of the underlying asset, the tokens, to go up. And for us, we were like, okay, great. Hyperliquid is a great product. More than 800,000 users, over 3 trillion in cumulative volume since inception. It's one of the highest revenue generating blockchains, one of the fastest growing, and the team continues to create new innovations that expand the product base. And so we care about Hyperliquid as a product, and the users that will come to it will come to Hyperliquid because they say, oh, I can't leverage trade Google today. What are my options for doing so? And the thing is, Hyperliquid is also, I believe, solved for the abstraction problem in blockchain, where it's very challenging to go to the Hyperliquid front end and try to figure out how to connect the wallets and bring in USDC and trade this and that. Now you have over 10 different front ends like Phantom, MetaMask, Rabby, Rainbow Wallet. People that are using these products on their mobile devices can just very easily, swipe and say, oh, I think Google is going to go up 5x long, and now I am able to access something that only institutional players were able to access years ago. And I think that's a major unlock that will continue to accelerate Hyperliquid's adoption.
Yeah, that makes sense. Thanks a lot. Okay, so I guess for the final question, if we were to meet, let's say 1 year from now, what would you consider a successful 1 year period for you? And what do you think are the major risks that hypothetically would not allow you to get there?
So we think about this a lot internally, and as we have conversations with our partners. For personally, we've accomplished, I believe, so much more than what any other digital asset treasury has done since the summer, right? We've having launched and operating a very successful validator, getting recognition from the core team, being able to speak on media forums like this, where we're able to talk about Hyperliquid and what we're doing, the Hype Asset Use Service product, actually having equity perpetuals that we've helped deploy that people are trading on today are major wins. And so that's 4 or 5 different revenue lines. By the end of next year, I want to be able to double that. I think that there are still so many more ways to create unique products, tokenization, financial instruments that users both at the institutional level and at the retail level can access. And that's what I would consider is such a foundational part of their business, because at the end of the day, all of that creates better foundations for financial activity on Hyperliquid. And as I said to you in the beginning, when there's more financial activity on Hyperliquid, there's more flows, which means that there's more fees, which means that there's more buybacks to Hype. And so because the assistance fund already owns over 10% of the supply, we see that accelerating quite a bit. In terms of risks, there's always things to consider, right? There's black swan events with regard to, will there be a larger downturn in the market? Will there be other structural issues that we saw, for example, on October 10th? One of the values of Hyperliquid is that it's all still self-custodied. So it's not the same situation as FTX, where users will be able to withdraw their funds. They do have direct control over their assets. And I think that there are also murmurs of other perpetuals exchanges like Aster and Lighter and Ostium that are moving into this space. And the way that I usually look at it is, if everyone is talking about perpdexes and you're coming into perpdexes now, you're probably a little bit late, or you obviously spent time to innovate. But what we see from the Hyperliquid side is they're continuing to innovate. So they're actually pioneering in the same way that Hyperion DeFi is with HIP3 markets. And the last thing I'll say is HIP3, or Hyperliquid Improvement Proposal 3, is just the third upgrade to Hyperliquid, right? You look at how many there are in Solana or Ethereum or BNB. And so we think HIP 4, 5, and 6 will continue to push the boundaries of what's possible for a financial system on chain. And you can be sure that Hyperion DeFi will be there at the forefront to continue to enable our partners and the teams to build these products so that Hyperliquid can become the house for all of finance.
Okay. Mr. Jung, thanks a lot for taking the time to do the interview with us, and I wish you the best of luck in the future.